Ladies and gentlemen of the crypto space, we're live on a Monday at 11:29 a.m., January 18th. This is going to be one heck of a week, one heck of a weekend. Absolutely incredible. I'm sure everyone saw what occurred over the weekend. It was spectacular to say the least. We don't see periods of time such as what happened over this past weekend often. We saw periods like it definitely in summer 2020, which definitely ended, as I pointed out several times, September 1st, pretty much. The beginning of September was a clear shift in the market activity, and we've seen very different market activity between then. Up until the beginning of 2021, and new things are going on. There's some not headwinds, but there you could the only way I could describe it is you could smell the change in the wind direction. It's like sticking up your finger and feeling the difference in the wind speed or something. There's a sense of a shift in the prevailing actions taken by people, market pressures up or down. I mean, clearly looking at the Bitcoin chart, which is definitely we're going to flip to in a second, we can see what's going on, and it's trending horizontal. There's a massive symmetrical triangle, and a good portion of the behavior we see with altcoins over the weekend is because of that horizontal price action. Let's get into it. Asset appreciation versus yield. This is pretty much a culmination of a tweet I did this morning. I'll pull up that tweet. We'll go from there. Exiting a position. Where to? You're going to buy something at $1 and sell it at 10. What the hell are you going to do? You're going to spend that, you turn $1,000 into 10 grand. What are you going to take that 10 grand and spend it? Then you're back to square one and you're screwed. So what does that all mean? This is a common short-sighted, unfortunately that's the appropriate word, approach to asset value allocation. And more needs to be thought through in how you manage finances. Folks, let's jump in. Today's episode, along with all episodes, sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Got RR in the house. Always a pleasure. Crypto Check. Yes. Good morning. Barry DGB. Yeah. Ear in. Always a pleasure. Crypto Monk. It's the crew. Heirloom in the house. Not trying to FUD, but what are your thoughts on DXY perhaps rallying and ruining our party? Well, that's exactly what occurred over the weekend, which is fascinating. The DXY rallied strong over the weekend. Significant appreciation above the 200 EMA in the 4-hour. So it's been pulling back. Interestingly, and that's quite interesting. So this is the rally. This is January 21st. January 15th. It was that Friday. So, and here's the... So, okay, so the 18th, so that's today. So over the weekend was pretty much this. This the rip through the 200 EMA to the upside. So we had a bullish move in the dollar, the DXY, basically versus the euro predominantly. Rip through a 200 EMA, which is a significant psychological barrier, and altcoins rallied. What the heck's going on? So for the vast majority of the way we've seen the correlation between the DXY, the dollar price movement, and the crypto space is an inverse correlation. This past weekend, we saw a proportional correlation. It's what happened. So as I remind everyone, we have our narratives. We all have been thinking the dollar wrecking ball, dollar goes up, everything else, assets go down. But that is not what occurred this past weekend. We saw the dollar showing significant signs of strength, and altcoins were ripping 50, 80, 100, and more percent in the last 2-3 days, and the most incredible altcoins as well. So the narrative, so the charts tell the story. And the story is that something has changed. Now, it can quickly flip back to the inverse correlation that we all expect, but that's not what the story was this weekend. And what does that mean? I don't know, but the whole point is that's the observation, and that's the story that occurred over the weekend. And we have to consider that, and we have to respect it, and the charts tell the story. That's the way we handle things around these parts. We're not irrational. We're not, I would say, I don't want to say bag holders, but we make decisions based on data, and that's it's what I like to see as my career. It's metrics-based decisions, where you make an app based on the data you get back from your analytics. So we make decisions based on data. We're not just making decisions based on our sentiment or our opinion or the way we feel. Oh, this coin is so incredible; it's going to change the world. No, that's how you're going to get screwed. Make decisions based on what the market tells us, and we fold the data into strong fundamentals. The fundamentals tell us what to look at, the technicals tell us when. It's the name of the game. Lewis is in the house. What are your thoughts on Polkadot Data as an asset appreciation model and a DeFi yield platform? So Polkadot is the predominant alternative smart contract platform right now. It's the prevailing powerhouse that has yet to emerge, but all signs point to it emerging in a very strong position. The amount of development going on in the space is immense. It's pretty much the strongest market other than Ethereum. Cosmos comes up after that, and then there's other nascent markets that are trying to find their footing. That's very important to consider because there's a lot of smart contract platforms that are either that have smart contracts deployed or don't. You're talking about Elrond has smart contracts deployed. Doesn't Tezos? Doesn't EOS? And you have Cardano, obviously, which doesn't yet have smart contracts deployed. So, what is one of the most important fundamental characteristics of an asset is network effect. So Ethereum has the network effect. It's far out ahead. It will not be disrupted. By the time something else approaches the scale and scope of Ethereum, Ethereum is that much further ahead. So Polkadot has the network effect. The developers are there. So developer activity occurring, what we see thus far, means developer activity will continue and just grow. They'll attract more and more attention, especially as products and services start to get deployed on the platform. The same with Cosmos. Cosmos hits the China narrative. It's been totally not consumed, but it's being utilized with regard to the Cosmos Hub Iris and IrisNet. Hits the China narrative, and it has network effect. That's extraordinarily meaningful. The folks with Tendermint and the Cosmos releases are just continuing to develop. They're not stopping. It's aggressive, and they're persistent, and they're making progress. It's very exciting to see what they're doing and how these puzzle pieces, these very large global macro scale puzzle pieces are fitting together. Elrond, I think, has great potential. There is a great deal of exuberance by the team and the developers, and it's further ahead, I believe, than many of the other platforms. I look to Elrond over stuff like Tezos and EOS for a variety of reasons. Not that I really know everything, the ins and outs of EOS and Tezos versus Elrond, but something about Elrond rings better. It imparts a better feeling as compared to EOS and Tezos. Tezos has been around a long time. It doesn't have much developer activity. Same with EOS. It's just not that there's nothing that I see that's exciting. There's the developer attention seems stagnant, and it's just not, doesn't have that fire, and that is meaningful because Polkadot and Cosmos sure as heck have that fire, and clearly there's like $22+ billion in Ethereum at this point, so there's significant fire there. And Cardano has zero smart contract support. There's zero TVL. You can't develop on the platform because there is no smart contract. So it has yet to even start achieving network effect. There's no development. You can't build on the platform. Now, don't get me wrong, Charles Hoskinson and the way he's doing it as a corporate process, kudos. I like the effort. I think it is a great product and has great potential. But there's a great big difference between a product that has great potential and a product that actually is acquiring network effect, acquiring TVL, total value locked, where there's actually money going into the platform. So it's not there yet. It's way too early. It's way too much of a speculative play, and that doesn't mean greater the risk, greater the reward. It could turn into an entire powerhouse, but that's just something that I look to shy away from. I'm not interested in something that doesn't have an ongoing velocity, an obvious acceleration, and an accumulating network effect. And it does not have any of those characteristics. Interesting, huh? Pellets, my man, always a pleasure. Matt's in the house. Chee. Barbridge, pretty much. It's early. They still are iterating, and their bonds aren't available. So it has caught my eye. Let's say that I don't have barn, can't own all the assets you want to own. You simply just can't spread too thin, can't go all in, and always consider risk. These new assets, they're probably going to be great. There's a lot of new assets that are going to be great, and there's a lot of new assets that are going to mess up. What do we know? We know platforms that have been sucking up liquidity and making significant contributions to the space and starting to work together. Not only have momentum and network effect, but they're also standing the test of time. Yeah, in the crypto space, like 6 months is standing the test of time. It's creating a foundation, and they're creating not boilerplate, but they're creating a baseline for how these types of platforms are to be built so that they are done securely and with as least risk as possible. And obviously, if a platform is deployed and the longer it's deployed, the risk continuously goes down. So there's a decaying risk associated with these smart contract platforms, proportional to the time that they are deployed, which is fascinating. And I was talking the other day on Twitter about yield curve, and yield curves in traditional finance have a time component. I guess there's a time component. What we have in the crypto space is overwhelmingly a risk curve, but that risk decreases. Probably proportional to the amount of time that they are deployed, as I just said. And I find that fascinating. So we have somewhat of a yield curve, somewhat of a risk curve, not necessarily comparable to the way this type of terminology is used in the legacy financial system, but it's new and it's different, and crypto is different and DeFi is different, but these properties are real, and how we use words and semantics to describe what we're observing emerge in the crypto space, this is real. And just because a terminology doesn't necessarily line up exactly with the way it's used in the legacy financial system, who gives a fuck? The point is, these words are meaningful and they describe properties that are emergent in the crypto space, so there's no reason we should not use them to try and tell a story of what the heck is going on. Thoughts on 88 MPH? No idea. Just no idea. I'm not interested in clones. I'm not interested in excess risk. What I'm interested in is yield. Let's go back to the title of the stream so we don't get too sidetracked. We don't digress too much. Asset appreciation versus yield. Exiting a position where to. So most people buy low, sell high. They're like, oh, I get a 10,000 for $1, and it's going to $1. I'm going to turn $1 or $10 into $1,000, and oh, I'm going to have $1,000, and then I'm going to buy my girlfriend a bag, and then I'm broke. So what's the point? There needs to be something more. You can't be shallow with your approach to value allocation and your financial. Everyone's their own fiduciary. Everyone's responsible for their own financials. So if you're going to buy something just to sell it, that means you didn't know anything about the asset. It means if you're gonna buy an asset and you're going to sell it for what? For dollars to buy another asset? Then the question is, what was wrong with the original asset? Why did you get rid of it? Why? Because it went up in value. That's why you got rid of the original asset. What was the point of the original asset? These assets need to do something. If you're just going to buy something that's going to go up, I'm not a fan of that approach to value management, financial management. Buy an asset because it has meaning, significance, and it produces yield, a recurring revenue stream. And that has longevity, and that has real meaning, and that has permanence, persistence, and function and utility. And that changes lives. And this is why people buy dividend bearing equities, albeit obviously the dividend bearing equities are extraordinarily inflated, just like tech stocks and just the other equities that don't necessarily carry a meaningful dividend, and so that just changes the risk profile. The further you are away from a moving average, the higher the chance of a mean regression. And basically, equities are just vertical. They are so far departed from, like, so far above the top Bollinger Bands, so far above the EMAs, especially like the 4 hour, the daily, dare we say the weekly. Oh my God, the monthly is just the deviation from those moving averages is extraordinary. So we're quite deviated from the long term, like the daily. Let's go back to the Bitcoin USD. So we're deviated from the moving averages on the daily, um, even on the 4 hour. Look, on the 4 hour, we'd be down to like 31. So we haven't had a mean regression in the 4 hour in quite a while, but we're substantially deviated on the hourly. We're talking in the 20s. Yeah, no, less than the 20. It's up to 18. And you don't want to see the weekly, and you definitely don't want to see the monthly. But it has a very different feel as compared to the equities markets. And we know, based on history, the way price action behaves quite often in the crypto space. So we have an expectation for, especially according to Plan B's models, we have an expectation for a significant moving average deviation, a massive correction to the downside. And now the topics that we're discussing is how significant of a correction to the downside. What kind of mean regression can we expect over the next couple of years? And that's what we know from the historical precedent. We know it's going to occur. We know this process is going to take a couple of years, and a lot of folks are leading to it being less pronounced than what has occurred historically because the story has changed. So we use changes in the story to adjust our narrative, to adjust the way the calculation we use and the analysis we use of the data at hand to predict or speculate on what's going to play out. So all signs point to the correction that's inevitable because we're going to have irrational exuberance. Bitcoin price is going to go through the roof. There's going to be a ridiculous blow off top to like $350,000, $500,000, and then it's going to have a significant correction. But how far that correction goes is dependent on the changed macro narrative, how Bitcoin fits into the global financial system. That is new. This did not exist in 2017, and the altcoins are a whole other story. What they're playing, the role they're playing, what DeFi Summer proved, and $22+ billion of TVL, and the monetary velocity being vertical. The monetary velocity of the DeFi space makes M2 velocity look pathetic. Looks like a failed system. I mean, they're just going to keep printing at the M2 level. Where do you think the $1.9 trillion stimulus is going to go to? It's going to, good portion of it's going to go at M1, but it's definitely going to go significantly to M2. That thing's going to ramp up. So that monetary velocity chart is going to go significantly down because GDP, yeah, sure, fine. Q over Q, we're going to see probably like a 3, 4, 5, 6%. I don't know. Some people probably expect even larger percent gains, but year over year, as Raul talks about, it's probably going to be negative. So I don't know. I don't know. That chart, I expect it to probably dip or at least bounce. It'll be suppressed. It's not going to just go back up. It's at 40, 50, 60-year lows. That M2 velocity chart is incredible. I've showed you that a bunch, guys. Pellet says, okay, so we are entering an alt season with a bull case for the dollar. Doesn't seem too good to me. It seems extraordinary to me. Raul has hypothesized that when the time's right, dollar rips to the upside, crypto rips to the upside, and gold rips to the upside. That's a narrative that he's talked about, and that's what we're seeing. We, at least in the short term, we saw the dollar rip to the upside, and we saw altcoins absolutely exuberant. And look what's going on with the Bitcoin chart. The Bitcoin chart looks extraordinarily bullish, and I wish I had the DXY up also. I'm not going to pull it up too much load on the computer. But clearly, we're overwhelmingly on trend in a symmetrical compression, higher lows, lower highs, multiple touch point on resistance and support. And look at this. Look at this. We're riding the 100 SMA in the 4 hour. This thing ripped above it's probably still looks like it's just below the 50 SMA in the 4 hour. It was above the 50 SMA, but look, the 50 SMA is converging on the 100 SMA. Um, if the 50 SMA crosses the 100 SMA, we could see some bearish price action, but then we have trend support below. We got more moving averages below, especially on the short term, and maybe it just holds. Right now, it's holding above the 100 SMA and still at a decent level in the RSI and the MFI, and Stoke definitely has room to rip to the upside, and there's bullishness. Look, there's higher lows. There's higher lows on all of them. Now you see that trend. You see bottom, higher, bottom, higher, bottom, higher. So this chart is overwhelmingly bullish to myself. Some folks might see it as being just irrationally bullish. I see it as damn bullish. Look at the story for Bitcoin. Look at the political and civil unrest. And just look at the financial system. Come on. Everything is just pathetic in comparison. And folks talking about FUD, look at Willie Will, follow Raul, follow Novogratz, listen to George Gammon, Lynn Alden, listen to the smart people, and stop listening to Peter Schiff. That boy's a special boy. I don't know his story. Who knows? His kid's a smarty though. RenVM, how do they facilitate in a customer search for yield? Ren provides you a recurring revenue stream denominated in Bitcoin. The Ren VM might be the most significant revenue stream I could think of. It could easily produce an entire yearly salary in the next couple of years. That's the speculation. That's the play. I expect that's my speculation. I expect one Ren VM to produce $40, $50, $60,000 a year in the coming years, if not sooner. I don't want to be too aggressive. I don't give aggressive price targets, but that's the expectation. That's my expectation. Thoughts on FBTC? Yeah, let's take a look at Bitcoin dominance for a second. I don't know. Folks say if Bitcoin dominance comes down, Ethereum rips it. Oh, look at that. Look at that. Let's go out to the daily. And this is why we see such bullish. Well, the chart tells the story. This is wow. If we're still above daily 100 SMA and 200 EMA, so but we're below the guppies, and look, we're wicking below the guppy, so those are short-term moving averages. So there is resistance, albeit we're bottomed out on the Stoke. It looks like the MFI is tilting to the upside, RSI as well. So looks like there's bearish pressure on this chart, and if this continues to the downside and rips through the 200 EMA and the other moving averages, there's another one down there. We could see significant Ethereum and altcoin outperformance. But the chart will tell us that. The chart will tell us when Ethereum and altcoins are outperforming. And we saw that this weekend, and that's, was it January 3rd, January 16th? Yeah. So this is, was that Saturday? There you go. Well, there's your Saturday altcoin rip of assets going 50 to 100%. So the little movements in the BTC.D for significant altcoin and Ethereum outperformance. Well, Ethereum didn't outperform this weekend, but the altcoins did, and that's what you're seeing right here in this rip to the downside. Fascinating, huh? Good morning, White Wolf. Stupid and didn't pick up Brick at $80. I learned about it from you. It's still a good value at $350. So getting into an asset when it's up several 100% is one of the most difficult decisions. There's no guarantee that an asset continues, albeit I always say trends continue until they stop and reverse. Rook did rip to 220 something dollars late last year, or before the 2021 New Year. I believe that was a rational price action, but this is more so of an organic rally going on. As we approach February 1st, where the Rook emission schedule is complete and the Dow is expected to launch, and we're going to see what happens with the Treasury, and we're going to have voting, and the keepers are probably going to get updated, and we're going to really start to see what the potential is for the platform, which is basically a money printer. It's incredible if you look at the Treasury, and it's just extracting value from strategic mempool evaluation and other arbitrage type opportunities. Just incredible. I think it's a unique project in all regards. So there's absolutely no reason it can't be in the $1 billion club, which would be probably about a 10x from here, a couple $1,000s a token. But that's anytime you're talking about price targets, it's always speculative. So nothing is guaranteed to fulfill the narrative that you create, that you observe, or that you speculate. Nothing's guaranteed. So it's hard, as I said, to get into an asset that's up 3, 4, 500% in a relatively short period of time. That is something that you're going to have to. So you bear in mind, like if you buy some, instead, if you were going to buy five at $80, now you're only going to get one or two for the comparable price. So you're going to be able to get significantly less. And this is what you're going to have to factor in to your risk analysis and your position sizing and your time horizon. Um, don't go all in. Never go all in. Never spread too thin, and you just can't oversize your positions. A couple percent of your portfolio to these altcoin assets. Otherwise, you're overexposed to potentially excess volatility. And believe me, when these altcoin assets turn volatile in the downward direction, oh, it's scary. And that's what we had in 2017, a rip to the upside, and then it was just complete devastation, and people were completely wiped out. So you just got to be considerate and respect the bearish time periods that the crypto space has found itself in. It's just not all bullish. Right now, it all seems bullish. Like it goes up, it stops, it goes down a little bit, and then it just rips to the upside, and then rinse, repeat, reuse over and over again. And this is basically what we saw many periods in time. We saw this last summer, we saw this in 2017 and earlier. And this is what happens. But the downside does occur. And to be a proper steward of your finances, a proper fiduciary, you need to respect that and take the risk into consideration. Crypto Monk, you tweeted, "Wow, being able to mint SUSD without trading a pint of blood." Yeah, L2 mainnet's live. So you go over to you go over to L1 Minter. You go to the L1 Minter. I'm not going to log in; it takes too much time. But from the L1 Minter, you got to burn all your SUSD. Then you can transfer all your escrowed SNX as well as your outstanding SNX to L2. Once everything's transferred, you go to L2 Minter, log in with MetaMask, and it's free. Use free to mint SUSD. It's free to claim yield. L2 Synthetics is crazy. The cross asset swaps with Curbs release is crazy. These are some serious infrastructure components that I cannot overstate. It's not excitement, it's just an acknowledgement of what they mean from a functional perspective. This is profound technology and the velocity that is being produced and deployed makes legacy financial systems and processes and businesses just pathetic. It's changing. Everything's changing. Seriously, some serious shit is changing. It's crazy. Uh, Anna's in the house. Always a pleasure. If you have any questions, I'm happy to help the best I can. Feel welcome to speak up anytime. Pellets, okay, so as the title says, how to see when to exit a position. So that's the thing. We're going to end on this note. If you're thinking about exiting a position, you're probably in the wrong asset. Why would you sell a wonderful asset? You're holding an asset for a year, 2 years, 3 years to just sell it? Is that what you want to do? You love the asset so much. It's going to change the world asset, and you're going to get rid of it. That means you don't believe in it. That means it doesn't interest you anymore, or it's failed and you don't want it anymore. That's the psychology involved. So why are folks buying assets just to sell it? You only sell an asset if the story changed. And there's some great assets out there, and I see no reason to liquidate assets. What you need to focus on is assets that have no reason to be liquidated because you believe in them and they make sense and they produce recurring revenue streams. So they have a purpose, a function, a utility. They do work for you. Now, maybe you have value in an asset that you hope goes up in value, but that's not a, that's I think that's makes it speculative because it's not ready. It's premature. It's not in a position to do work for you. I think that's an erroneous allocation potentially of excess value because you should not be hoping for an asset to go up in price just to sell it. You're in the wrong assets. You probably over allocated to the wrong assets. You only sell an asset if the story has changed and is no longer capable of doing work for you. And that's what's emerged in 2020 crypto, the DeFi summer, are assets that have a capacity to work for you instead of you working for you, instead of you getting up at 8 a.m., driving an hour, or just getting on a webcam and working. Now we have a capacity to acquire and accumulate assets that work for us instead of us working for us. That's a story I can get behind. That's a story that changes your life. Crypto check, always a pleasure. Stake and bake, or or yield, and that's what I like. That's what I focus on: is assets that give me yield derived from transaction fees. That's the most sustainable source of revenue I could possibly think of. Now, clearly, that's what dividend-bearing equities do. They're sharing revenue, profit sharing. I just the problem with equities is that they're based on real companies, and the state of the economy is that real companies are devastated, and the asset price does not reflect that devastation. So their yield, I don't trust, and I don't expect businesses to extraordinarily expand and grow. Maybe that's the case. Maybe I'm neglecting some equities and REITs and dividend bearing instruments, and their businesses are growing, but the odds are they're overpriced. Whereas in the crypto space, we're flooded with all these incredible new assets that give you a portion of the platform's yield and revenue, and the monetary velocity is literally exploding. If the monetary velocity is exploding, the transaction fees are exploding, the yield that these assets produce will explode and go up and grow, and that will drive the network effect, and that will garner attention. And then, before you know it, and before anyone realizes, everyone will say, "How did you know?" And then you have you have a position in these assets that are starting to take roles in the legacy financial system because they're better and they've deprecated the legacy financial system. How about that shit? But in August, we have had to sell alts. Okay, so um, the DeFi narrative has evolved since September. In September, there was a lot of irrational exuberance. Altcoins, incredible altcoins, were up 1,000%, and they weren't producing meaningful enough recurring revenue streams. I believe the story has changed. I believe in the last 4 or 5 months, the story has changed. And that's my assessment of the market. Everyone has to come to their own assessment and understand the risk that they're taking, allocating value to different assets. Clearly, if Rook goes to $10,000, it's probably overvalued. If it goes to 1, 2, 3,000 and the market cap's worth $1 billion, there's plenty of incredible assets that produce recurring revenue streams that are valued at over $1 billion. So you got to put the market cap into perspective. You got to put the transaction volume, how much velocity is in that the asset is experiencing, participation, so on and so forth, trading volume, and these are all the considerations. You can't say blanket statements that because in August we had to sell. It wasn't August, it was September 1st, but still, the point being, we can't just say it like that. We have to dive into the details, look at the data. The fundamentals tell us what to look at, the technicals tell us when. If we see a significant event, which is what I saw on September 1st, 24-hour short on the coin Gecko, we saw that the gains stopped. And for 4 months, we saw 20% a day, 20% a day, 20% a day for these incredible altcoin assets. And then they stopped across the board. The story changed. We can only make decisions if the story changes. If we make decisions before the story changes, we're probably premature. The trend continues until it stops and reverses. you have to find or try and get a sense of when things stop and reverse. And before they do, the trend continues. So as of right now, just everything looks so incredibly bullish to me. And the fact that altcoins ripped over the weekend with the DXY rallying was absolutely fascinating to see. So the story just seems bullish to me with the fiscal stimulus, even though Stephen Van Meter will argue quite logically and reasonably that it's deflationary. We see how it juices the equity markets, whether it's deflationary or inflationary. They say they're printing money. They jack up M2 supply, jack up M1 supply. It juices the equities markets. It juices asset price valuations. Be it deflationary, inflationary, that's the argument that will stand the test of time. Fascinating, huh? Do you see the platforms getting absorbed by the legacy banks like Google did with the competition? That's a great statement. I'm happy I didn't miss that, White Wolf. Possibly. They have great power, and they will defend their position and role in the system. And at some point, we could see some very significant thing. And guess what? If they did something like that, that's just a validation. And that, you know what that'll do to the network effect of these platforms? Uh, yeah, it'd be absolutely crazy. Is it still expensive to enter and exit L2 on synthetics? To enter and exit L2, but that's what I'm feeling is the macro narrative for L2. Value is going to go into L2, and you're not going to want it to come out because you're going to move your synthetics over to L2, and it's free to transact, operate within the ecosystem, submit synthetics, generate get your claim your fees and your rewards. L2 is going to be a black hole for value, and it's going to expand the projects that implement it, whether it's optimistic or ZK rollup. It's just going to be a black hole for value, and it's going to be fascinating to play out. That's my speculation, which is going to significantly disrupt supply of these assets, and that's what I see. Can I do an updated vid on best recurring revenue streams we should look at this year? Yeah, I posted it just briefly ago, so I can do an updated vid, but here, this is the list. Where is it? I just posted it. Why doesn't it show? It's got to be here. Here. It's right here. You'll find it in my history. This is it. This is the most. These projects, I think, bear in mind, it's really hard for folks that are just seeing these projects to maybe catch a position because they're up huge, massive. Dot is $17. It launched at like $2. Ave was at $40. It's at $200. 1 inch bottomed at $1.10, and now it was 1 inch is at $1.81. These assets are up massive amounts of money, and Curve bottomed at 20 cents. It's Curve's at $1.47. Rook was at 60, $70 3 weeks ago. It's at $350. Synthetics at the beginning of last year, I was buying it at 70 cents. It's $15. That's 2,000%. So it's very hard, and there's no easy answers I can give of what to acquire, but you need to consider risk. Something that's up thousands of percent always has the potential to not be up thousands of percent. So I don't know. But all I could give you guys is these stories that you could process and digest and tell yourself and attempt to make the best decisions possible. And that's all we're here for, is to try and make the best decisions possible, to do right by yourself as a fiduciary, to do the best for your family, so on and so forth. Thank you, everyone. Matt, it's a pleasure. Crypto Chick, always a pleasure. Pellets, my man. Everyone else, it's always a pleasure. 12:08 p.m. Monday, January 18th. Thank you, everyone, for joining. I'll be here tomorrow. Smack those thumbs up buttons. Tell everyone to subscribe. Oh, we got 11 likes and 23 people. Let's smack the damn thumbs up button. Come on, boys and girls. Help a brother out. I wish you all a wonderful day. See you tomorrow. Peace.